Hi, I'm Helen Forster, and this is a debrief of the question Anya from Section C of the TX mock exam. This was the 15-mark income tax question, and I want to run through this to show you how you could answer it most effectively, how the marks would be awarded, where some of the easy marks are, so that you can get a pass in the exam. And this one is split into two requirements. The first part is a nice, fairly straightforward calculation of Anya's taxable income, and it does tell us to use a 0 for any items which are not taxable or deductible. Watch out for that. Taxable income means that we don't need to actually calculate the tax. There won't be any extra marks if you calculate the tax. And if you're told to use 0 for items that are not taxable or deductible, then there will be marks available for that as well. So let's have a look through that computation. We'll break it down step by step, and we've got 3 different types of income for that tax year. First of all, employment income. And for the employment income, I've set up my heading, and we've got the salary, nice easy half mark. Look out for any dates. There are no dates for the salary, so that's presumably been for the whole year. And green for an easy half mark for putting in the salary. Then it gets a bit trickier. We then have accommodation. And accommodation is probably the most complicated taxable benefit and the one where you've got to remember the most things. Now, the accommodation itself, the benefit is going to be the annual value, which we can see that we've got here. And if the property cost more than $75,000, which it did, we need to put in an expensive charge as well. Now that's either going to be the original cost or the market value when it was first provided, if it was owned for more than 6 years at that time. So here it was bought in 2010. Anya moved in on the 1st of October 24. So at that point, it had been owned for 14 years. So we're going to base the benefit on that $250,000. If further amounts have been spent, those will be included, those will be added to that, but only if they were spent before the start of the tax year. Now, there has been £4,000 spent in November 24, but because that's after the start of the tax year, that won't actually be reflected until next year's benefit. And we need to multiply that by the official rate of interest. So the official rate of interest, which you can get from the tax tables, 2.25%. And we've also got a benefit for the furniture for the living accommodation. And the furniture was bought during August, so Anya moved in October. It's been there all the time that she's lived in the property. We've got the cost, but for furniture, it's a use of asset benefit that we're going to tax. So we're going to take 20% of the value when it was first provided as our taxable benefit. Now, I've done this as a separate working. You could do this as part of your main computation, but do make sure that you break it down and clearly show all of the steps. So the way the marks are allocated for this, half a mark for the annual value, half a mark for using the value when it was first provided, as opposed to the original cost, half a mark if you haven't included the improvements. So I would show those separately. You do need to mention those to get that half mark. Yellow for the not quite so easy marks here. Half a mark for deducting the $75,000. Half a mark for applying 2.25%. Now just note here that if you had got the figure wrong, so if you'd used, let's say, the original cost, or if you've added the improvements, then you would have lost the half mark for that bit, but you could still get the half if you've multiplied by 2.25%. The furniture, 1 mark, fairly straightforward, 20% of the value when it was first provided, which will take as the cost. And all of those are from the 1st of October. Now you could have time apportioned each part of this, but there is 1 mark, fairly easy mark as long as you've spotted it, for that time apportionment. So as I say, if you've time apportioned each part of this along the way, that would have been fine, but there is 1 mark for the time apportioning. So that is, I think, one of the trickiest benefits that you will have to deal with. And then we can pop that figure back into our main computation, referencing it through to that working. Then we've got some subscriptions. So we have a professional subscription of $280 and a subscription to a health club. Not reimbursed, so these are potentially things that can be deducted. And you can only deduct amounts from employment income if they are wholly, exclusively and necessarily in the performance of your duties. Now, the professional subscription, it says, is approved and it's directly related to her employment. So that is going to be an allowable deduction. However, although she uses the health club to meet clients, that's not necessary for her to do her job. And this is through case law. We've had people try to claim this in the past. It's not wholly, exclusively and necessarily for the performance of her duties, so that is not going to be deductible. And a half a mark for that one. That is a fairly common expense, so hopefully you put that in. And that's the employment income. Then we need to work out her trading profits. So she has got some self-employment. She started trading on the 1st of June, and we're going to work on the cash basis unless we're told otherwise. So from the 1st of June to the end of March, which is our tax year basically, we've got sales, cash sales of 9,750, and we can then deduct expenses. Now the expenses, first of all, are some expenses incurred before she started trading. And pre-trading expenses in the 7 years before you start are allowed if they're wholly and exclusively, so we don't have the necessary word here, for the purposes of the trade and things that would be normally allowed, and you just treat those as if you spent them on the first day. Advertising is usually going to be fine, but that includes £100 spent on lunches for potential suppliers. And unfortunately, that looks a bit like client entertaining. The only type of entertaining that's allowed is staff entertaining. It's not that. And so we've got a split here. The advertising is okay, that can be deducted, but the entertainment is not. Not very obvious, so we've got half each for those. Then we have some motor expenses. Now there's quite a lot of information here, and some of this is relevant for part B. She bought a car which she's using partly for business, and we've got details about the emissions, the miles, we've got her motor expenses, and it says, so this is the important bit, that she decided to claim the flat rate mileage allowance. And in the tax tables, I've just popped those up here. You can claim 45 pence per business mile up to 10,000 miles, 25% above that. So for this one, no deduction for the motor expenses. We've got 23,000 miles in total, 60% for business, so that's 13,800 business miles. Again, make sure you show a breakdown, label your answer so that the marker can easily see what you're doing. We have 10,000 at 45 pence, 3,800 at 25 pence, half for each of those. And that gives us a total deduction of 5,450. So that is our trading profit figure. And then the final type of income is the property income. And again, I've done a separate working for this. And for the property income, we've got some details about Anya renting out a room in her main residence. So this is not just normal property income, it's actually property income that will qualify as rent a room. And there is a bit of a clue because it does say that she uses the most beneficial basis to calculate her taxable property income. And in the tax tables, you have got a reminder of rent-a-room relief. If you're renting out a room in the house that you live in, then you can either be taxed on the rent less the expenses, So that would be the rental less the 275 a month, or rent less the limit, which is in the tables as 7,500. If you're going to use the most beneficial basis, you just need to compare the expenses and see whether or not those are more or less than 7,500, because you can't deduct both. So here, we need to work out the annual amount, but I think it's fairly clear that the expenses are going to be less than 7,500. So we've got the rent, nothing for the expenses, and we claim the rent-a-room relief of £7,500. And that's the property income of 2,100. Now you'll notice here that I haven't actually shown any workings. So for the rent received, I've just put in the number. And that's something that you need to make sure that you do. You either show a working in a bracket, or, as I've done here, where you've calculated something in a cell, just make sure that you use a formula to do that. So I've got equals 800 times 12, which is for 12 months rent. And the marker will be able to see the formulae inside the cells. Obviously, markers are human, so they don't really want to be having to look inside every single cell to try and work out what you've done. So you just need to make sure that you don't do too much in one cell. So for example here, I wouldn't have done the working for the whole of that property income in a cell. I've shown the rent-a-room relief separately, but where you've just got, say, a number multiplied by a number of months or two figures added together, then you can just do that within a cell. But don't combine too many steps in one cell. Bear in mind that the marker is going to have a look and try and work out what you've done if you got it wrong. So make their life easy. So that's all three of our different types of income. If we go back to the main computation, the requirement was to work out taxable income. So we have our employment income, we've got the trading profit, the property income. So you could have done the workings on the face of the computation here. Doesn't really matter. And then the personal allowance, the final thing to go in. Just watch out. Remember that that will be reduced if the income is above £100,000. But in this case, it's not. So nice, easy half mark to finish this section for deducting 12,570. And that's in the tax tables as well, if you need it. The second part of this question was just 4 marks, and it was actually quite tricky. What we have to do is to work out the income tax saved by choosing to claim the flat rate mileage allowance instead of capital allowances. Now this is where we look back at that note number 3 in the self-employment. Anya bought the car, and we've got details about the emissions, the motor expenses, but she decided to claim the mileage allowance. She had a choice. If she didn't claim the mileage allowance, she could have deducted capital allowances on that car, but just the business percentage where there was private use, and claimed the business percentage of the motor expenses. So the motor expenses were not deductible, where she claimed the flat rate mileage allowance instead. And we've got to work out how much tax she saved by opting for the mileage allowance. So we could start by working out the capital allowances and the motor expenses. We've already worked out the mileage allowance, and then we just need to look at the difference between those two and think about the rate of tax that would have been saved. And it's only 4 marks, so we don't want to be doing full income tax computations with the 2 different amounts here. The capital allowances, we've purchased a car for 11,500. We've got the emissions, so in the tax tables between 1 and 50 grams is 18%, and it's 60% for business. And then, just be careful, Anya has only been trading for 10 months of this year. Doesn't matter when she bought the car, it's the length of her accounting period that falls into this tax year that is relevant. So we do 11,500 times 18% times 10/12 times 60%. Doesn't matter about the order of those. 1.5 marks. And it will be a half for each part of that you've got right. So half for 18%, half for the time apportionment, half for the 60%. And the motor expenses, which could be deducted as well, 60% of 2,300. So 1 mark if you've put that in. And that would mean that she would have deducted £2,415. If we look back at Part A, our mileage allowance was £5,450 from Part A. So she's deducted £3,035 more, half a mark for that. And because we calculated that her taxable income in Part A was, I think, 69,000 and something, so that took her into the higher rate tax band, that means that the extra deduction has reduced income that would have been taxed at 40%. So not quite so obvious, the higher skills mark, but the income tax saving, we just multiply. We describe this as her marginal rate of tax, so the tax that she would have paid on the top part of her profits. So we multiply that rate by the extra deduction, 40% of 3,035, and she's saved £1,214 by claiming the mileage allowance instead of the expenses. So just take note, if you've got a business, then you need to do the calculations, but that is definitely worthwhile. So that's the end of this question. So hopefully that's shown you how the marks would be awarded, where some of the easier marks were. And remember that in the exam, you just need to score 50% to score a pass. If you got all of the marks here, then that's great. But hopefully you should have been able to score at least half of these marks. That's the end of this debrief. I hope you found it useful, and I wish you all the best with your exam.